Nigerian external reserve has risen to $41.046 billion, the highest in 4 years, driving further appreciation of the naira in the parallel markets. Welcome to Business Points, where we x-ray the Nigerian economy and the government policies. I am Kike Lomo Okeri. Data from the Central Bank of Nigeria shows that the external reserve rose steadily to $41.046 billion from $37.21 billion on June 30, 2025. This translates to $3.836 billion, that is 10.3% increase in reserve in 2 months. Reflecting the impact of the upsurge in reserve, the naira yesterday appreciated for the 4th consecutive day to 1,545 naira per dollar in parallel markets from 1,550 naira per dollar on Wednesday. Likewise, the naira appreciated to 1,535 naira point one naira per dollar in the foreign exchange markets. Data published by the Central Bank of Nigeria shows that the exchange rate for the naira fell slightly to 1,535 naira per dollar from 1,537 naira per dollar on Wednesday, indicating 2.89 naira appreciate for the naira. Consecutively, the margin between the parallel market and NAFEM rate narrowed to 9.9 naira per dollar from 17.01 naira per dollar on Wednesday. The foreign portfolio inflow on the Nigerian stock market has dropped by 30.7% to 50.48 billion naira in July 2025 against 72.82 billion naira in June 2025. The domestic and foreign transaction report by the Nigerian Exchange Limited released shows that the foreign outflow increased by 43.6% to 95.47 billion naira in July 2025 from 66.49 billion naira in June 2025. A further analysis shows that total transaction at the nation's bourse increased significantly by 133.09% from 778.65 billion naira, that is about $509.02 million in June 2025 to 1.8150 trillion naira, that is $1.835 billion in July 2025. The performance of the month of July 2025 when compared to the performance in July 2024, which stood at 491.61 billion naira, revealed that the total transaction increased significantly by 269.19% in July 2025. The total value of the transaction executed by domestic investors outperformed transaction executed by foreign investors by circular 84 points. The significant increase in the total value of domestic transaction in July 2025, according to the NGX, was due to block trade. The report further reveals that the total transaction executed between July and prior month, June 2025, increased significantly to 161.07% from 639.34 billion naira in June 2025 to 1.6691 trillion naira in July 2025. Also, total foreign transaction increased by 4.76% from 139.31 billion naira, about $91.07 million, to 145.95 billion naira, about $95.17 million between June 2025 and July 2025. The institutional investors outperformed retail investors by 38%. A comparison of the domestic transaction in the current and the prior month, that is in June 2025, reveals that retail transaction increased by 88.07% from 274.63 billion naira in June 2025 to 516.50 billion naira in July 2025. However, the institutional composition of the domestic market increased significantly by 216.03% from 364.71 billion naira in June 2025 to 1.1526 trillion naira in July 2025. Meanwhile, on the performance of the market over the last 2 decades, over an 18-year period, domestic transaction increased by 33.15% from 3.556 trillion naira in 2007 to 4.735 trillion naira in 2004. While foreign transaction also increased by 38.31% from 616 billion naira to 852 billion naira over the same period. Total domestic transaction accounted for about 85% of the total transaction carried out in 2024, while foreign transaction accounted for about 15% of the total transaction in the same period. The transaction data for 2025 shows that the total domestic transaction are circa, that is 4.7269 trillion naira, while total foreign transaction is 1.28123 trillion naira. The federal government, through the Nigerian Upstream Petroleum Regulatory Commission, has declared that the country is firmly on course to ramp up crude oil output to 2.5 million barrels per day by 2026, following its strategic look unlock deep water potential, revive dormant field, and accelerate approval for new projects. It also announced the completion of a case-by-case review of the marginal field licensing that are due for renewal. The Chief Executive Officer of NUPRC, Gbenga Komolafe, stated this in Abuja while delivering his goodwill message at the 2025 Pengassin Energy and Labour Summit with the theme "Building a Resilient Oil and Gas Sector in Nigeria, Advancing the HSE, ESG, Investment and Incremental Production." It says, energy transition is gathering pace across the world, noting that global investment in low carbon energy not only exceeded 1.7 trillion naira, $1.7 trillion in 2023, surpassing the fossil fuel investment for the first time in history, but also surged by an additional 24% in 2024, reaching an unprecedented $2.1 trillion. Despite this shift, Komolafe stressed that hydrocarbon would remain central to global energy demand for decades, especially in Africa and Asia. NUPRC boss disclosed that reform under the Petroleum Industry Act 2021 and recent presidential executive order reposition Nigeria as an attractive investment destination by cutting average contract cycle from 36 months to 6 months and offering competitive fiscal terms. It revealed that the commission, working with operators and service firms, was spearheading a 1 million barrel per day initiative to drive incremental production. He explained that new cluster and nodal development strategy would help reduce costs, shorten timelines, and de-risk investments using shared infrastructure and tie back to FPSOs such as Bonga, Egina, and Egbani. He says this high-level forum brought together leading operators, service companies, and policymakers to forge a common agenda for unlocking more than 810,000 barrels of oil per day in potential peak output from approved deep offshore development plans. Komolafe says the reactivation of the dormant field, accelerated approvals and development of improved recovery techniques have already increased production from 1.46 million barrels per day based in October 2024 to 1.8 million barrels today. Adding that with this momentum, the Commission is firmly on track to reach 2.5 million barrels per day by 2026. On energy transition, Komolafe says Nigeria is not ignoring global climate concern, but could adopt a gas-centric decarbonization pathway. It says the NUPRC has completed a case-by-case review of the marginal field licensing exercise that is due for renewal. Monthly revenue collected by the electricity distribution companies dropped in June to 182.11 billion naira, that is 4.93% below 191.57 billion naira recorded in May. Latest data from the Nigerian Electricity Regulatory Commission indicates that the figure contained in the commercial performance of the distribution companies fact sheet for June 2025 released by the Commission also shows that collection efficiency in June was 76.57% after DISCO billed customers 237.85 billion naira for energy consumed during the month. The collection efficiency in May was 73.17%. The fact sheet rate recorded EcoDisco at 33.18 billion naira, Ikeja Electric at 32.66 billion naira, and Abuja Disco at 30.11 billion naira. As the three best revenue collector, with Yola Disco at 2.96 billion naira, Kaduna Electric at 3.62 billion naira, and Jos Disco at 5.71 billion naira. As the worst performing utility. However, speaking on consumers' experience in the sector, Chairman Electricity Consumers Association of Nigeria, James Chidoki, says service rendered by the DISCO could not justify the revenue to the rate. He stated that with over half of customers not metered in the sector, most are paying for services they did not receive. The DISCO are responsible for providing customers with meters but are refusing to do so because they profit from the issuing estimated bills. All right, let's take a quick short break. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point on Global Television, where we extract the Nigerian economy and the government's policies. Since October 2023, only 36% of targeted households has benefited from the conditional cash transfer program launched by the federal government to cushion the economic hardship for vulnerable Nigerians, according to the latest mid-year report published by PwC. Most of the beneficiaries have received the cash transfer once in 2023. The program was relaunched in 2023 following the removal of petroleum subsidy and the unification of the foreign exchange market by President Bola Ahmed Tinubu's administration. The scheme is aimed at directly supporting those within the lowest poverty bracket. PwC's report indicates that officials' figure shows that 5.6 million households benefited from at least one transfer. Just 2.4 million received a second, and few than 1.3 million progressed to the third payment after biometric verification, raising questions about the pace and reach of the initiative. The report recalled that in April, the government began a national identity number enrollment campaign to improve transparency in the social register, requiring at least one adult in each eligible household to be able to verify with NIN or BVN before receiving cash transfer support. The professional service firm owed that NIN registration, especially in the rural area of the country, may improve the ability of the government to provide support to most vulnerable households nationwide. In May, the federal government says the total of 2.3 million households had been confirmed and cleared for payment under the renewed CCT scheme. The World Bank had approved $800 million loan for the initiative, out of which $530 million had been disbursed as of April 30, 2025. In its Nigerian Development Update report titled Building Momentum for Inclusive Growth, the World Bank also noted that only 5.6 million households, around 37%, have received at least one tranche of direct transfer, and called for expansion of the program, which it said remains dependent on biometrically verifying at least one adult member of the household with a foundational digital identity. Also, effort to urgently provide support to the poorest and most economically at-risk households should be redoubled and expanded. Meanwhile, PwC says that geopolitical tension had a muted impact on oil price in the first half of 2025, as price did not rise despite heightened geopolitical risk. The world had recorded US-China tension, the Middle East conflict, and cyber threats in the first half of the year. Oil price fell from $79.21 per barrel to $71.21 per barrel between January and June 2025. The decline was driven by increase in output of nearly 1 million barrels per day in April and June by OPEC Plus, which reinforced downward pressure amid uncertain demand. Sustained escalation in geopolitical tension, particularly the Israel-Middle East conflict, may still have an adverse impact on oil price in the medium time. PwC projected that Nigerian GDP will expand modestly by 3.4% in 2025, supported by higher crude oil production and stronger performance in the finance and insurance, construction, ICT and real estate sector. Headline inflation is projected to moderate to 21.46% in 2025 on the back of the hawkish monetary policy environment and stability in the foreign exchange market. The Nigerian Customs Service Tinkan Island Port Command has achieved a remarkable feat by collecting 16.4 billion naira in revenue through the effective deployment of the Unified Custom Management System, Bodogu. This milestone is a testament to the efficiency, transparency, and responsiveness of the system in streamlining port operation. According to the statement by the Public Relations Officer of the Command, Oscar Ivara, the achievement is a result of the Command's commitment to leveraging technology to enhance revenue collection and trade facilitation. The Custom Area Controller in charge of Command, Frank Onyeka, attributed the success to Bodogu system, which has improved the ability of the licensed custom agents and stakeholders to access payment platform and complete cargo clearance process in real time. He added that the platform has integrated all key elements of port and custom operation under one digital interface, enabling faster processing, accurate valuation, and enhanced monitoring of cargo activities. Onyeka noted that the record-breaking revenue figure is not just about numbers, but reflects the game-changing role of the Bodogu system in the modernizing port operation. The Custom Area Controller emphasized that the command remain dedicated to enhancing trade facilitation, securing revenue for national development, and supporting all port users in achieving timely and cost-effective cargo clearance. It says a coordinated approach to ensure that cargo's clearance process are seamless, compliant, and business-friendly. Nigerian foreign exchange reserve rose to 41.00 billion naira on August 19, 2025, the highest level in 44 months. This is according to the figure published by the Central Bank of Nigeria on its website. The current level marked the highest level recorded since December 3, 2021, and shows the steady external accretion witnessed in recent weeks. The new trajectory comes after months of gradual depletion and volatility, largely attributed to intense pressure from external debt repayment. The reserve have staged a strong rally in August and adding about $1.64 billion month to date from $39.54 billion on August 1 to $41.00 billion by August 19. This represents a 3.69% growth in less than 3 weeks. The momentum has been broadly consistent across trading days, with only marginal pause. The building up began in earnest from early August, when reserve crossed the $40 billion threshold on August 7, 2025, after closing July below $39.4 billion. From there, the pace of the accretion quickened. Reserve advanced to $40.5 billion by August 12, 2025, and crossed to $41 billion just a week later. Alright, this is where we draw the curtain on Business Point today. Join me again on Monday on Global Television on DSTV channel 365 and Star Time channel 276. To stay connected, kindly follow us on all our social media platforms. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.